Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. In our today's session of automated trading, we are continuing to work with the BWMFI, that is Bill Williams Market Facilitation Index, which is named after its developer, and the ATR variance. We are taking different values of the ATR and we are taking a look at their difference, and we are utilizing that for our algorithm, and that's why I have titled it as ATR variance. This is the second part of the ongoing series. I hope by now you are well familiar with the functionality of the MFI and the ATR. The ATR is utilized for optimizing purpose, and the min-max will guide us in determining the trend, whether it is uptrend or the downtrend. This is pretty simple, lowest and the highest values over a specified period of time. Before we get started for the day, there is a standard disclaimer. Here I would like to remind you that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive trial runs and also allow it to run on the demo account for sufficient enough time to get a clear cut idea of the efficacy of the algorithms which we will be developing. And of course, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. With that, we head back to the chart to see what we are trying to achieve with our algorithm. So we want a buy trade to happen when the maxima is rising and the minima is rising. So we will be comparing the current minima and the maxima values to the values a day back, that is 24 hours back, with the minima and maxima defined for the 30 hours, that is for 30 time period with 1 hour each. And then we turn our attention to this ATR. Here we want the current ATR, that is the ATR which we define using shift 1, that is last hour's ATR, to be less than the ATR 12 hours back, and we want this difference to be at least 20% of the ATR, and we will be adjusting for that. So the basic purpose behind this arrangement is that after any run, any volatile move either on the upside or on the downside, the underlying instrument goes into a consolidation phase. So for many hours there is not much of a movement, and during such time the ATR goes down, and only when the fresh momentum starts, the we want the trading to be trade to happen, and that's why we want the consolidation to have happened, because of which the ATR would be less than the value it had 12 hours back. And then whenever the momentum will show up, we want the MFI to be up and the volume to be up, and then for determining the side of the trade, we are simply relying on this min-max formation, and then the last hour's candle closing. We are not really determining the trade side using the MFI. We simply rely on the MFI for guiding us when the momentum builds up. It either can be on the upside or on the downside, and we will determine that using different tools. So let us go back on chart to see what we have done so far. In yesterday's session we did instrument subscription. Here we are using Euro USD. Then in the position amount we have defined it at 0. We got this single BWMFI indicator block. It is defined for hourly, and the shift is 1, that is last hour's value will be taken into account. Then we got these 4 min-max blocks defined for the hourly time frame, and as I said, the current value will be compared to the value 24 hours back, that is a day back. So here we have these different setups for the bid low price and the ask high price. Ask high price will help us determine the maxima, and the bid low price will be utilized for finding the minima. Then we got the ATR for difference, calculating the difference between the last hour's value and then the 12 hours back. And as we already discussed while charting, we want the difference to be at least 20% or more than that, even 25% you can make it. You can of course adjust any algorithm as per your need. Then for further pinpointing the entry and the exit, we also got these 5 hours minimum maximum values. Actually, these are defined for 10 minutes time period with the time period is of 30. So the 30 candles of 10 minutes each will give us the data for 300 minutes, which is of course the 5 hours. So far so good. Now we start to build it further from here onwards. So first thing, we again need to go back on chart. We will start to build either on the buy side or on the sell side, and then we will do the optimization as required. We will leave a row or two blank for calculation purposes. I think we will need to do a lot of calculations while determining the exact entry and the exit point. So here this is the USD JPY, and we are looking at the Euro USD. So we change the underlying instrument, and now suppose if we are looking for any sell trade, what we want to do is now let us take the example of today's session only. So here you can notice that we have this MFI going up and the volume also going up. The time is 0 GMT of 12th May, and we have further conditions also fulfilled, that is the minima is falling and the maxima is falling, the sale trade can happen, and also as you can see the closing price is less than the open price, so this condition is also fulfilled. So we can now go for a sale trade. Now is the question where exactly the order should be placed, and we had discussed it in yesterday's session as well. We want it as close to the 5 hours maxima as possible. So here if we take a look, the 5 hours maxima will work out somewhere close to 1.08175, and then we will be placing the order close to that. And I think maybe we can utilize the hourly ATR, and 50% of the ATR, hourly ATR should be good enough. We can simply do one thing, we can deduct 50% of the ATR from this maximum value, so the limit order will be placed. And to make sure it is limit only, we will need to also do other calculation where we will be comparing the last tick's difference. Whenever the order will be placed, we will need the last tick to be uh, away by more than 50% of these 50% of the ATR from these maxima level. Only then the limit order will be placed, otherwise the algorithm will execute unwanted trade if we place a limit order and the price happens to be above the desired level. So in that case it will be kind of executing the stop orders, so we don't want that to happen. And let us start doing our work, and as we proceed we will do further changes as and when required. We leave 2 rows blank for, yes, I think 2 rows should do, and then we start to build first the buy side, and then we will get to work on the sell side. We need multiple action block first. Okay, we got it. Now here is multiple action. Now as I said, we require the conditions to be defined, and for that we are going to need a lot of if conditions to be put into the setup. First thing first, we want last hour's MFI to be up, volume to be up, and as I had explained in earlier sessions when we were working with the BWMFI with a different setup, and the thing is only one of these four value at any point in time would be more than 0 and the rest of the three values would be equal to 0. So we want the trading to happen only when the last hour's value for MFI up, volume up is more than 0, and other three conditions, that is MFI down, volume down, MFI up, volume down, and MFI down, volume up, they would be displaying value of 0. It should be greater than 0. Then the second thing is we also need to bring in one historical candle here, as we also need to compare its opening and closing level, and that's why I said we need to leave some space just in case we require some other tools, some other indicators and variables for building our buy and the sell side. So here we will need the info, get historical candle. Okay, so we keep it here only. Minutes, we change it to 1 hour. With side shift 1. Okay, now this is candle 35. We will need to compare candle 35's closing and opening value. So we here take a look on the auto created variable section. Candle 35 is here. We want its closing level to be higher than the opening level. Okay, so we now again take logical info, and here comes a block. First input first input greater than second input. Now we again look for the maximum minima conditions. Now we want the maxima to be rising and the minima to be rising. So we compare the current maxima of the high price with the maxima 24 hours back of the high price. It should be maxima 17 should be greater than the maxima 18. We bring in other if condition. It should be greater. Okay. And same thing for the minima as well. We want the minimum of the low price to be greater than minimum of the current minima of the low price to be greater than the minima 24 hours back. So we take minima 19 and compare it to minima 20 and it should be greater. So we have defined these conditions. And this should be first input greater than second input. So far we have defined the min-max conditions and the historical candle data and the MFI requirement. So that looks good. Now we also need to compare the ATR values. So now starts the calculation part. So let us first get these blocks arranged and then we will start with the calculations to help us guide in our endeavor. So here comes okay. Now we will need to take the calculation expression. We also need to define the minimus conditions of last 5 hours as well using this 10-minute candle, but we will do it after we define the ATR range. So here we need mathematical and the calculation expression comes in. So we look at the ATR value 12 hours back, and here I had explained to you on the chart as well. We want the ATR value 1 hour back to be at least 20% less than the prior value, as here you can see, provided the rest of the conditions are fulfilled. The last hour's value, if we assume, let's take it as 12.6 pips, then we will need the prior value to be at least above 16 for trading to happen. So here this is the difference. Now if it is 17 here, and if we deduct 3.4 pips, then it will be 13.4 pips, and it will be more than the 12.6 and 12.8 pips here. So it will be within our defined range, provided rest of the conditions are fulfilled. The algorithm can go for a fresh trade there. So we take the ATR value and multiply it by 0.8 to get 80% of the ATR value, and then we will compare this value to the 80% of the ATR, and it should be less. So we now take this and we define a fresh variable, create new variable of double type, and it will be ATRV. And it will be 0.8 type double. Okay, we need to now go to users variable, and it is here 0.8 into the ATR to us back, so we get the 80% of the ATR A1 into A2, and it will be called the ATR difference. We can say AD. And here we will need the ATR 1 hour back to be less than this 80% of the ATR 12 hours back. So that's the point. Now we take our if block and we take AD as a second condition, and we compare the ATR values here of last 1 hour, and it is line 21, and line 21 should be less than the ATR difference. So we now are free to take other conditions. And it should be less than the second input. All good. Now we have defined the control requirement, the min-max requirement, the MFI requirement, and the ATR requirement. Now we need to sharpen our focus on the lower time frame. So we need to look into this min-max of 10 minutes each. And here we want consolidation to have happened, and also at least some retracement should be there. Okay, Euro USD only. And suppose if we are looking at the sell trend, then during the last consolidation it should have climbed on the higher side, and the last 5 hours maxima should also be rising, and we want to check for that. So we utilize these blocks which we have got here, and we compare the current maximum value to the maximum value 5 hours back, and then it should be the current maximum value should be higher than the maximum value 5 hours back. So that is the takeaway. And here we again want it to be asked high price. This one also is ask and high price. Okay, so the maxima 23 should be greater than maxima 24. We take in one more if requirement, maxima 23 should be greater than maxima 24. Okay. Now the question is, as I said, we want the limit order to happen, and for the limit order we are going to need to define price such a way that we don't end up our algorithm should not end up confusing it for a stop order, and for that we need to draw a proper demarking or proper difference between the execution price and the price at which the order would be placed. Now, as per the chart, we want it as possible, as much as possible to the highest point of last 5 hours, and for that we are bringing in the maxima. And now we want to keep some buffer, maybe even half a percentage, no, 50% of the hourly ATR can be deducted from these maxima. We will be defining a price at which, if the value goes, then the order would trigger, and for that we will need to do calculations here. We will also need to calculate the difference between the last tick and the maxima, and then that will also help us determine the purpose. So again we take in some calculation expression block. We will need at least 2 to 3. Let's see. And here mathematical components, and here comes the calculation expression. Now we want to take a look at the maximum of the high price, the current maximum value. So that would be the maxima 23. Oh, okay. Let me see if I have placed most of the conditions well. Yes. Here we do this calculation. Maxima 23 will be reduced by 50% of the ATR. For that we need to do one more calculation, and here also we need to take the ATR value of last 1 hour, then multiply it by 50%. So this is line 21, and create a new variable, and it will be ATR1. Start value would be 0.5. Let me see if we have got the value right. Yes. And then we need to do A1 into A2. And the result will be AD1. Okay. So this will be the 50% of, we need to put this one first, and then this difference. Here we got the 50% of the ATR, which we will deduct from the maximum value, and it would be a1 minus a2, and this will be the by execution price. So it will be named as BE. Okay, so this is our going to be by execution price. But one more thing would need to be taken into account, that as I said while explaining too, that we need to make sure last tick price whenever this pending order is placed, it should be less than the maxima 23 by more than 50% of the ATR. So we will need to define that as well, and then do the necessary calculation. But as we can see, we are already running out of time, so we carry forward in tomorrow's session. For the day, we will be signing off here. Thank you all for joining in. Work continues. We might take a bit long for this setup, as it is a bit complex compared to the setup which we have done in recent past. So bear with me for that. See you tomorrow. Goodbye.